Hello, and today we're talking about the 10 biggest property investing mistakes. My name's Marco, I'm a property investor, developer and mentor. And today we're talking about the biggest mistakes I see property investors make. Now this isn't only, beginners, novices and people new to property. It's people and investors with property experience. Irregardless of their level, they're still making mistakes. And these are the 10 most common and significant mistakes that I see being made time and time again. And make sure you stay tuned to the very end of this video because this is where the biggest mistakes naturally occur. So number one, the first biggest mistake I see being made all the time is people investing in property with no clear strategy or direction. Now it's really important to have a clear defined strategy. Why are you investing in property and what is your strategy? Because once you have a strategy, then it's very simple to execute on the strategy and you're just following the process. But time and time again, I see investors just picking off properties that they think are good investments but actually don't really suit their portfolio. Now, as a little action I want to give to you now to take away and implement is always have two exits. Now, what do I mean here? Well, if you're investing in property and you're looking to acquire a particular property, always make sure you have two options. The first option could be maybe you're trying to flip a property. So you're buying it, you're flipping it, and maybe you're making some kind of profit in the middle. Great. But what is your second option? If that flip doesn't work, if you struggle to sell the property or property prices fall, well, you need a second get out of jail option, a second exit that is still a good one. So again, your second option in this example could be that actually you're going to rent the property out. Yes, maybe you're not making as much money as you would do in the first exit where you're flipping, but it's a great backup option, and this backup option is still a profitable option. So the second mistake that I see happen time and time again is investors buying cash flowing property that doesn't have a sufficient margin of safety. Well, what do I mean here, Marco? If we go back, say 2 years ago, let's say 2021, when interest rates were very, very low, investors were buying properties. Maybe these properties were cash flowing, say £200 per month, which is great. But what happens when the inevitable happens and interest rates increase? And maybe they have to remortgage onto a higher interest rate. Well, all of a sudden, maybe that £200 net profit they're making per property is reduced to say £50, £75 per month. Now, is it worthwhile owning a buy-to-let property, a property that you're renting out, if you're only making £50 per month profit? Personally, I don't think so. Okay, if you're investing in areas with high capital appreciation, you could argue the fact that the majority of the money is made in the capital appreciation when you come to refinance or sell the property in 5-10 years time. I fully understand and appreciate that. But for me, if I'm holding property and renting it out, it's not worth my time and not worth my team's time if we're only making £50 per property per month. So again, I see lots of investors buying property without sufficient margins. Rates obviously have increased over the past year, so mortgage costs are increasing, and as a result, profitability is being squeezed. The third mistake that happens time and time again are investors purchasing property in the wrong locations. And I say wrong like this because really there is no wrong location, but in locations that maybe aren't best suited to their strategy. And what I mean here is those investors that may be chasing a high yield, and as a result they're getting stung by poor capital appreciation. So yes, they're making great cash flow, but actually when you look at the increase in the value of this property over time, it's extremely poor, which drags down the combined return. And I've got a video that describes areas you should not invest in. I'll link to it in the description. Here's a picture of the thumbnail, and I highly suggest that you consider watching this video after you've watched this video all the way through to the very end. Number 4 follows on quite nicely from the previous example, is those investors that chase a high yield. And as I've already mentioned, if you chase a high yield, most of the time you're stung with a very poor capital appreciation. Let me just demonstrate this to you. So let's say you're investing over here at a very nice high yield. Great, you're making loads of cash on a monthly basis. That's perfect. However, what you tend to find with these locations is the capital outlook is very, very poor. It's down here. So the value of that property over the 10-20 years is less than average in the UK. So what happens is, although you've got a nice high return here, you've got a very low return on the capital side, and this drags down your combined return. So if you're investing in property, certainly for the long term, consider capital outlooks and capital forecasts. And really, I'd argue that you should be investing in areas that at least have average capital appreciation. Number 5, this is a really important mistake I see being made time and time again. And this is the mistake that I stress to my mentees when I onboard them. And this is that some investors don't take ownership and don't take accountability of the legal part of the purchasing process. Well, what on earth do I mean here? Isn't it a solicitor's job to purchase the property for me to ensure that the legal's complete? Well, it's not the solicitor's job to make sure you purchase this property. It's the solicitor's job to de-risk this investment for you and to make sure you're aware of the possible risks that incur with owning this property 10, 20, 30, 40, 50 years down the line. So therefore, Therefore, it's your job as an investor to see this through all the way from offer accepted to completion. So don't assume that your solicitor wants the property to complete. Of course they do, but that's not their job. So you as an investor need to manage this process and be responsible for this process. So again, what I recommend is if you haven't heard from your solicitor in a week, just touch base, see how they're getting on, what are they working on. Maybe you'll either need to nudge your solicitor, or maybe they'll need to nudge the vendor solicitor to action something, and therefore you're ensuring that the property is being kept on track and will exchange and complete in a timely manner. So the sixth mistake that I see happen, and again, this is a very common mistake, especially with those new to property and for those that have just watched Homes Under the Hammer, is that refurbing a property and doing something to a property, maybe renovating the property, doesn't necessarily equal profit. Well, what do I mean here? Let's just make a rough example. Say you bought a property for £100,000 and you're spending, say, £25,000 doing a full renovation and refurb of the property. Great. So you're all in for about £125,000. But what if this property is actually only worth £125,000 once it's been fully done up? In other words, there's no profit. So again, it all comes down to the price of the properties in those areas. So you really have to work backwards here. What is the value of a property that's recently been renovated and done to a high standard? Well, actually, if we just use the previous example, if we're buying it for £80,000, putting in £25,000, so we're all in for about £105,000, but we know the end value is £125,000, well, all of a sudden, we've got £20,000 equity, which is absolutely great. So it all comes down to doing your research. Make sure you know your figures and you're confident with what that property is worth post-refurbishment. Refurbing any old property doesn't necessarily equal profit or equity. That's a really good rule to take away. So number 7, which follows on very nicely from the previous point and sticking to the refurb and renovation area, is that I don't see enough investors allocating a safe contingency to their refurb. So what I mean here is I see some investors that have no contingency whatsoever to the refurb, which again I think is high risk. Others will only have a small contingency, maybe 5%, 10%, something of that nature. Now, as a rule of thumb, as a default, I always have a minimum of a 10% contingency on my renovations. However, if I'm not too sure and there's additional risk in a particular property, I will increase this to 20%. You'd much rather be pleasantly surprised than go over budget. So again, I strongly urge you to consider putting a contingency on your renovations somewhere between 10 and 20% dependent upon the risk. Number 9, again, another related point when it comes to refurbing a property, is that I see a lot of investors doing this on the cheap, not only in terms of the refurb, but when it comes to maintaining the properties after it's been let. Doing it on the cheap, maybe choosing not to put money into the property, when really the right thing to do is to actually invest in the property. Yes, it's going to hurt your cash flow in the short term, but long term, it's the best for the property and also it's best for the tenant. Because what you tend to find is for those investors that do it on the cheap, maybe they really look to minimize their refurb or they don't like spending money on the property once it's already been let, what you tend to find is you have a high tenancy changeover. So maybe you normally have a tenant for say 2, 3, 4 years. Well, in fact, maybe every 12 months they're moving on because they're not happy with the standard of the property. So what that will mean is you will struggle to retain tenants and you're spending more money and time and effort and energy in finding new tenants. So the take home here is do it properly, invest that extra money in making sure the property is right from the onset, or if something happens once the tenant is in the property, be prompt to address it, do the right thing, picture yourself living in the property, and if it's right for the property, I would consider pulling the trigger if that means maybe installing a new boiler or, actually putting a new washing machine in or something of that nature, because that tenant is most likely going to stay there a little bit longer, and that's going to help actually your return on investment in the long run. So the last and the 10th mistake that I see property investors making, this is such a serious mistake, don't get me wrong, I don't see it every day, but I certainly see it every few months, is investors not having the right and correct planning permission for the property. So what do I mean here? Well, I've seen investors turn a house into a HMO, a house of multiple occupation, where 3 or more unrelated people live in the same room without the correct planning permission, which is illegal, and this is a big no-no. Again, if you're doing a development of some kind, depending on what the development is, you may require planning permission, and I strongly urge you to get the permission before carrying out the development, because when you actually eventually do come on to selling this property, well, who on earth is going to purchase it if you don't have the right permissions in place in the first instance? And let's face it, you're probably going to get caught. Someone is going to find out and maybe even report you. It could be an existing tenant or another landlord or someone who owns the property down the road. So planning is such a crucial part of the property investing process. And if you're not sure, speak to a planning consultant. So there they are, they're the 10 mistakes that I see property investors make time and time again. And I put a lot of effort into this video in thinking about these mistakes. And these are mistakes that not only I see people new to property, but also people with some property experience. So if you're looking to learn from these mistakes and invest in property the right way, head to my website, www.ms7.uk, and book a call with me. I'm very passionate about helping people invest in property in the right way. Thanks very much for watching the video, and all the very best with your property investing day. Goodbye.